We're here with Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com, and we'll be dissecting what happened with the markets yesterday. Before we begin, write down in the comments what you think will be the best performing asset by the end of the year and also beyond 2022. Is it gold, Bitcoin, stocks, anything else you're eyeing? Let us know. We'll be asking this question to Gareth Soloway, and he'll be answering this question towards the end of this interview. Gareth, welcome back.
Hey, thank you, David. Great to be back.
Great to be with you again as well. Now, yesterday we had this 1.5% sell-off in the stock markets. The S&P 500 was down 1.5%. It was a pretty big sell-off. It was the biggest single-day drop since May. Yet today, this morning, I'm looking at the pre-markets action. It looks like the futures are up. So maybe yesterday's sell-off was maybe an overreaction to the headlines. What do you think?
So yeah, folks, we did see a sell-off in the markets yesterday. A lot of that was based on the yield drop. So we've seen a very dramatic drop in the 10-year yield, and that's kind of putting investors on edge. Investors like consistency. They like slow moves. So just like we saw when yields were pushing north to 1.75 on the 10-year, that was freaking the markets out. Same thing when you've had such a dramatic drop to the downside. Now, the drop yesterday definitely was fueled by the Delta variant concerns. We're seeing a massive rise in cases here in the United States compared to just a few weeks ago. But it's unlikely, I would say, that we'll see another shutdown. And I don't think you're going to get that type of negative for the economy going forward.
I don't know what it is like in the U.S., but I've heard that before in Canada. We're likely to get a shutdown. And then over there in Montreal, where I was living, we got a second and third round of shutdowns. So don't take it personally when I say I don't believe you anymore, Gareth.
Yeah,
Anything can happen at this point.
I understand that too, right? I mean, it's definitely the question mark, and I think that's why the markets are concerned, right? I mean, that's why you saw the sell-off yesterday. I would just point out that at this point, at least in the U.S., there's enough vaccinations where everyone that has wanted to get one has gotten one. And if you don't want to get one, I think the outlook is like, okay, that's your choice, which is valid. But again, at this point, I doubt they'll shut down the economy on a political basis. That would be very, very kind of not good.
Well, I think some governments around the world have done maybe some math, and they realize that it's cheaper to bribe people with millions of dollars to take the vaccine than it is to risk a shutdown of the economy and lose millions more.
It is.
Yeah. So some governments, like I think in Canada, I think in Asia, they've taken that calculation. Now, turning back to the markets, Gareth, yesterday we had some fear around COVID, but it didn't really just start yesterday. If you take a look at the 10-year yield curve here, let's take a look at this chart. The yield curve seemed to have been sloping down for quite some time now. That usually is an indicator of declining confidence in the economy. What do you think is going on?
Yeah, so there's no doubt that there's declining confidence, right? So not only do you have the rise in the Delta variant, but you also have this fear that, and this is something I've talked about in the last interview I was on with you, David, is how you fear that after this huge reopening, there's some sort of air pocket that the economy is going to have to go through, right? So you have everyone saving a lot of money, right, during the COVID lockdowns. Now they're spending it on vacations and going out to dinner and going to parties and this and that. And the question is, well, what comes after? So you let's say you save $1,000 in that period and you spend it all on vacations or whatnot. The question is, what's the new reality after that? And I think that's part of it too, is people are starting to say, okay, well, you got the Delta variant, which is potentially hurting the economy. Then you have this air pocket as well. And that's creating this kind of yield curve slope down that could be an issue. The one thing I'd love to show you guys here is this chart on the 10-year yield. This is a level I'm looking at very, very closely. So right now, the 10-year yield's at 1.159. And just below right here, there's a 50% retrace from the high from this low. So again, I'm looking at that as a technical level where I do think yields will bounce. That level's right around 1.12. So we're very, very close to that. And I do think ultimately yields are going to head back up. I think this is kind of a combination of people were over leveraged on the long side of yield. So you had to see a flush out just like we've seen on Bitcoin. And then you also had the Delta variant pop up, which has made the yield here drop even more. But eventually the printing of money is going to win out. In my opinion, there's no way around it. The printing of money will win out and yields will start to trade higher again.
It's interesting. Usually, you have an inverse relationship between yields and stocks. I think that's what's been happening, right? The stock markets have been continuously being pushed up to new all-time highs. Yesterday, though, I think yields were dropping yesterday, were they not? Yet stocks had a huge sell-off. So anyway, let's talk about what happened yesterday and how you were positioned going into yesterday and then now going into today. Again, pre-market. What's on your radar right now? How do you think you're trading today's action, given that all the futures I'm looking at are in the green?
Yeah, so number one, it's important to kind of take note of where the futures are in the green. So the spiders right now are just up 0.3%, which to me is somewhat of a weak bounce considering the big drop yesterday. So again, you're always at these highs. You're going to have this kind of buy the dip mentality where you get a big drop and people say, oh, this is a drop and I haven't gotten all in, so I'm going to buy the dip. And that's the initial phase off of an all-time high. The one thing that concerns me here on the spiders, and you can see it here on the chart, is that we have broken again below this trend line that stretches all the way back to 2020 lows. And anytime you have a major pivot low like the 2020 COVID low, and it stretches and basically connects through all these lows, when you break it, you need to go on alert. One of the things that this recent bounce did, which occurred yesterday, is it confirmed this breakpoint. So you see, so over here we closed below, but you never had a secondary close below the trend line. You went right back up into the mix. 2 days ago, or on Friday, we closed below the line. And yesterday, we actually closed below that low. To me, that's a term I coined called confirmation of a breakdown. And that's something that even with a small bounce today has me in a very negative bias on the S&P 500.
Couldn't that also mean that the action was just oversold and that you're due for a technical bounce up? Is that possible?
Yeah. Absolutely, absolutely. But remember, technical bounces are basically situations where people are saying, okay, well, we've fallen X amount and then we're going to buy it in, or buy up to it. So I think that's exactly what you're seeing today. You're seeing this kind of technical retrace bounce. If you want to talk a little bit of technicals on this chart, you can see that there was this little pivot right here. We kind of came right into it. So you should get a little technical bounce. That's not unusual, especially near all-time highs. My question is, even if we bounce up, this line now becomes resistance on the market. And my analysis says that even if we do bounce for a few days, eventually we're going to roll down and start making lower lows.
Okay. And so today, would you be on the long side then on individual securities, or are you staying out today?
So as of now, this is how I've positioned myself. So going into the last week or so, I've continued to accumulate some shorts on the indexes, expecting a bigger multi-week, maybe multi-month correction in the markets. However, yesterday I did pick up some airline plays, and I was very close to picking up some cruise lines. Let me show you the Jets ETF here, which is the airlines. And again, this to me was something, and this is a pure technical play, right? Because the fear yesterday of the Delta variant, you think, oh my goodness, shutdown maybe. But if you look at the Jets ETF, which represents the airlines, it's been in a steep downtrend for the last month to 2 months. And look at this level that it got to yesterday. I mean, this is just a beautiful support area right here. So I actually did some buying on this, and so far it's up. I also picked up some DAL call options as well on the same basis that you hit some technical support right here. So this is very short term for me. Ultimately, it wouldn't surprise me if after a bounce in the airlines, we see another move to the downside in them. But on a short term basis, I did go long airlines yesterday on the weakness because of the technical chart.
Okay. What's your outlook for, I guess, travel just overall? I mean, airlines, it ties into your outlook on the economy, I guess. So do you think this has a long-term potential, this stock?
Yeah, so I think that overall airlines are going to do fine. Again, I just cannot see, and I know Canada has done it differently, but in the U.S., I cannot see another shutdown. I think that's very unlikely. So I think that in general, people are going to travel. I think it's not as bullish because of the Delta variant, right? Because people are still going to be a little bit nervous. But for the most part, here in the U.S., we're so fed up with being locked down. The politicians are unlikely to do that again. I still think there could be mask mandates put into place to kind of protect against the Delta variant. But again, to be locking people down and that situation is, again, very unlikely. So I think the airlines, you're not going to see this insane surge like they were hoping, which is why we've seen the airline stocks come in here, but it'll go back to a pretty solid level that will be fine for them.
Speaking of insane surges, we haven't applied those two words to Bitcoin in quite a long time now. Gareth, what's going on with cryptocurrencies? Can we pull up a Bitcoin chart?
Yep, let me take a look here. So Bitcoin is at a pivotal place, right? So if you look at Bitcoin, you have the 30,000 level, which was that target from this initial head and shoulders breakdown. We hit it perfectly. We then chopped around. We then pierced 30,000 here, but never closed below it. And here we are today below that level. So what I would say is your simple analysis here is watch to see where Bitcoin closes today. If it closes below 30,000, it very likely could start a cascade event of a second deleveraging that takes you down to 24,000, right around 24.4 actually is the exact level. And then if that breaks, you're going to sub 20,000 on Bitcoin. So literally today's close on Bitcoin could dictate whether or not it goes straight down to that 24-ish thousand and then potentially sub 20,000 level.
When was the last time we had $30,000?
Looks like the last time we were right at 30,000, we was on the 22nd of June. So right there.
Yeah.
So it's almost exactly 1 month ago. And today's the 20th of July.
People say it's been in a holding pattern with Bitcoin, but I'm looking at this chart. It looks like it's just been a downtrend.
Yeah, so I think they're referring to this consolidation right here, which basically from when it first hit 30,000, it's still, we're now just below 30,000, but it's really been in that range for a long time. But in technical terms, if you're a technical guru in terms of charts, that's considered a bear flag because you had this sharp move down and then consolidation in the lower 25%. And let me just go over that for a technical sense here, is when you get a big drop in any stock or commodity or crypto, and you go sideways and chop sideways in the lower 25% of that move. So if you take this high right here to this low, notice how this is basically in the lower 25% of that move. The term there is basically a bear flag, which is, again, one of the reasons why I'm net negative on Bitcoin here.
Okay. And moving on to another asset class now, gold. Gold has been flat. Let's just call it what it is, flat. So when is it going to stop being flat is my question.
So the gold chart is actually really fascinating to me, and I continue to be long gold. I have GDX in my portfolio. I have Newmont Mining in my portfolio. And one of the things I'm watching here is a potential inverse head and shoulders. So number one, you have this longer term bullish pattern, right? So we have from this high, all this is consolidation inside this bigger move to the upside. But more importantly, in the short term, you have an inverse head and shoulders. Here's your shoulder, head, and shoulder. And if you break the neckline right here, you can actually calculate the target by taking this low to the line, extrapolate that same distance straight up, and you have a target of around 200 on the GLD. So the key is going to be this break point of this trend line. And I want to be clear on that because a lot of people will say, oh, well, Gareth says it's going straight to 200. It has to break the neckline to trigger. So it has to break this. Once it triggers, you should get a pretty volatile move or direct move up to about the 200 level on the GLD. So again, bullish pattern, inverse head and shoulders here. And again, we're just waiting to see if gold can trade up and take out that neckline right there.
I ran a poll on my Twitter page last weekend on Sunday, and I asked people what they think is the best inflation hedge right now. We had about 2,000 respondents, and the majority of the people who responded voted for gold and silver. I think you and I have talked about this before, but let's bring it up again just for good measure here. Inflation hedge, you're looking at 6 to 12 months out. Bitcoin, gold, S&P 500, or the Treasury Inflation Protection Security, or any other asset. What do you think is the best inflation hedge for you?
I think those people that voted on that poll are very, very intelligent. I'm with gold on this one. I think 12 months out, S&P is lower. I think 12 months out, Bitcoin could still be below this level, still kind of in this 2-year cycle of consolidation pullback that we saw in 2017, mirroring that. I think gold is the place to be where, even if gold only is up 5 or 10% from here, if every other asset is down, you're a winner there. And that's kind of where I'm positioned where I think that, again, I'm short the indices, but if you can't be short, then I would be more so in gold or in cash in the short term. And again, in all fairness, some cash, but make sure you're diversifying out of dollars in terms of the inflation bug.
Okay. And can I conclude then that based on the assets that we discussed today, from stocks to Bitcoin to gold is your preferred asset because of what you just said, or do you like something else more than gold right now? I know you say you're somewhat bearish on Bitcoin, so at least for the foreseeable future.
So I'm near-term bearish on Bitcoin, and I want to be clear on that. Like long-term, yeah. So if you asked me what's the asset I would invest in for the next 10 years, now you change it to Bitcoin, because I do think in the next 10 years, Bitcoin far outperforms. I still think 100,000, maybe even 500,000 is a very likely target on Bitcoin. But the problem is that from what I see is that you had that 2017 high, which was just around that or just under that 20,000 level. And then you basically went into a 2-year pullback, even a little bit more of 2 years, where it got down to sub 10,000 and consolidated. So I'm looking at that period. Now, it might be shorter, because of, things are much faster paced now. But either way, I think it's at least a year out before you see the move up in Bitcoin begin, especially a move that could take out current levels. So I think that, again, gold is the safer play for the next 12 months and then reevaluate potentially flipping into Bitcoin.
And on stocks, we'll end it on stocks again. Gareth, we started with stocks. Let's go full circle here. Mm-hmm. Even if we do have a breakdown, it just seems to me like, this is my perspective, it seems to me like we're going to have a breakdown and then it's just going to rally back up again. And so we'll have a series of corrections to the downside, but then the long-term trend would be up. So correct me if I'm wrong, but if you're an investor, wouldn't you just stay in, don't touch anything, and ignore the noise and you'll be fine? Or do you have a different approach?
So the question is, if you're a long-term investor, right? So if your time horizon is 3 years or 5 years or 10 years, or if it's your retirement account and you're not retiring for 30 years, then I think that's fine. There's no doubt that over the longer term, stocks generally go up. If you're someone like me who's more of a swing trader and a time horizon of a couple months to 6 months or so, I think you actually want to be in cash or short the market. In terms of a long-term trend, now this isn't a super long trend, but keep in mind that this is technically, this is a trend line. So from the lows of 2020 all the way up, and you have a break here. And that is something that at least for the next month or so, I would be very aware of, where we could see lower lows. And that's, by the way, that's the next thing I'm looking for. So if you look, you have higher high, so high, higher high, higher high, higher high. Here's low, higher low, higher low, higher low, higher low. So all along, we're making higher lows. That's the next thing I'm watching. So we got the trend line break. We confirmed it. Now let's see, does this market come down and take out this low? If it does, that's another nail in the coffin for the S&P in the short term, as that would now signal a lower low being put in. And that, again, would tell me there's likely even more downside on this market. Potentially, I have a target here that I'll give you guys. This pivot high from pre-COVID is kind of what I'm looking for as a max downside move, which is around 340 on the SPY. Notice that pivot high, that'll be significant support, but it wouldn't shock me, and sorry about that little pop-up there, but it wouldn't shock me to see it come all the way back into that level.
All right, so what's your max upside now? Sky's the limit or not really?
Well, if we make a lower low, I think you can officially go on record and saying, okay, the high is in at least for the next, 3 to 6 months. I really do believe that. This trend line break would be so significant that I think you could go on record and say that. So that'll be the next thing I watch. And if you look at the spiders, right, spiders are barely positive now. They're only up 0.11 on the day. Wow. So, who knows what happens here? We could obviously rally up, but keep in mind that you do have a confirmed break of this trend line up sloping now, and that is an important technical indicator. And remember, I'm not the only one that finds these things. There are institutions that hire people and pay them millions of dollars a year to do this same analysis, and they're telling the institutions, hey, we've got a confirmed break here, and those institutions are likely going to be on the sell side or shorting the market as well.
And these bands that you've drawn, the upper and lower band, what happens if they converge?
Well, basically, anytime two lines converge, it forces the market to exit that range. Now, we've already exited the range, but what I always say is when you have a triangle, essentially these are coming together, forming a really long triangle. But if price was still in the middle, price would be forced to either break out or break down. In this case, it didn't quite get closed and it broke down already, but that would be what would happen.
Okay, excellent. We'll watch for those breaks, Gareth. Welcome back to the show. It's always a pleasure, and thank you so much for being here today. We'll speak to you next time.
So pleasurable to be here, buddy. Thank you so much.
And thank you for watching Kitco News. I'm David Lin. Don't forget to follow me on Twitter at DavidLin_TV and Gareth as well at Gareth Soloway.